This is Nightly Business Report with Tyler Matheson and Sue Herrera.
If you're watching and living in an evacuation zone, you need to leave now. So if you're in an evacuation zone, get out.
Hurricane Matthew barrels towards Florida. It could be one of the most expensive storms in U.S. history and inflict billions of dollars in damage to coastal homes. We'll have the latest.
Major shift. The world's largest retailer, Walmart, reined in its profit outlook as it spends a lot more to look like an e-commerce company and less like it does today.
Getting ahead, why millennials may have a reason to whine in the workplace. Those stories and more tonight on Nightly Business Report for Thursday, October 6th.
Good evening, everyone, and welcome. Hurricane Matthew is massive, and it is continuing its march toward the southeastern part of the United States. President Obama declaring a state of emergency in Florida. The governor of that state ordering millions to evacuate, warning that millions more could and almost certainly will lose power. The waves are already picking up, and the economic disruption has started. Businesses shutting their doors, theme parks closing. There are gasoline shortages, and that is not all. Morgan Brennan reports tonight from Daytona Beach.
As Hurricane Matthew barrels toward the eastern coast of Florida, President Obama signing a declaration of emergency for the state. More than 1.5 million people are being urged to evacuate, and throughout the region, more than 2 million people, the most we've seen since Superstorm Sandy. Throughout the day, Florida Governor Rick Scott has been urging people to evacuate if they are in unsafe zones and to take this storm very seriously.
We should not be putting people's lives at risk because you made the foolish decision not to evacuate.
Folks further south in Florida are already without power, and Florida Power and Light, one of the largest electric utilities in the country, expects 2.5 million people to be without power on its 10 million customer network. They're also warning that some of those outages could be for long periods of time as the utility has to repair parts of the grid. Here in Daytona Beach, we see many businesses already boarded up and sandbagged with people leaving. Hotels here have already closed to the general public, and this is considered an evacuation zone that goes into effect at sunset. We have ports up and down the coast are closed, with cruise ships and container ships being rerouted. In stores, shelves are picked clean, from bread to water to batteries to generators, at everywhere from Home Depot to Target. And at gas stations, many gas stations along the coast are already experiencing fuel shortages, with the average price of a gallon of gas in Florida ticking up by several cents since Tuesday, according to Gas Buddy. Theme parks have closed down, including Disney. It is only the 4th time in Disney's history in Orlando that it has closed. The last time was 2004. But in terms of this hurricane, it's still much too soon to know what the damage and thus the economic impact will be. However, for every 1 million people that are evacuated, Planalytics says that results in $100 million in losses. So for all that are watching and in the area, please be safe. And for Nightly Business Report, I'm Morgan Brennan in Daytona Beach, Florida.
And as millions flee the path of Hurricane Matthew, they leave their homes behind. Homes that will no doubt sustain considerable damage from the fierce winds and, even worse, from the rising water. Diana Olick takes a look at just what's at risk.
No matter how much Floridians shore up and board up, there will be damage to the state's homes, most notably from the storm surge, which could reach 9 feet. CoreLogic ran the numbers, and they are staggering for a Category 4 hurricane. In Florida alone, 954,000 homes are at risk of storm surge damage. The reconstruction value of these homes is just over $189 billion. In Daytona Beach, which could get the worst of it, there are 97,000 homes in its path with reconstruction value of over $19 billion. As the storm moves up the coast, 138,000 coastal homes in Georgia lie in its path, reconstruction costs there of $30 billion. By the time it gets to South Carolina, forecasters expect Matthew will have weakened to a Category 2 storm, but 124,000 homes are still at risk of flood damage, with $32 billion in reconstruction. The numbers are considerably higher today than they were when Hurricane Andrew hit in 1992. Florida was the epicenter for the housing boom and bust, and construction there is strong again now. More than 200,000 new homes have been built in the last decade, according to John Burns Real Estate Consulting. And that doesn't count the many, many new residential towers still sprouting up in Miami. And while building materials have improved in the last decade and new codes require things like shutter systems and high-impact glass, very little has been done in terms of construction engineering to help mitigate the damage from these storm surges. For Nightly Business Report, I'm Diana Olick in Washington.
Insurance companies with exposure to Florida were down sharply in Wall Street trade today. These insurance companies, mostly small cap stocks, they all fell 7% or more, with HCI Group down the most, off more than 12%. Several of the country's largest insurers, as you may recall, pulled out of Florida after previous storms.
Airbnb is offering free rooms in Florida and South Carolina to those affected by the hurricane. The vacation rental company has activated its disaster response tool, which connects evacuees with rooms offered up by Airbnb hosts at no charge. Florida Governor Rick Scott made mention of that service in this morning's briefing.
On Wall Street, stocks started the day mostly lower, and the Dow dipped, weighed down by shares of Walmart. More on that one in a moment. But the major indexes climbed back to end just about flat, one day ahead of the monthly employment report tomorrow. Here are the closing numbers. The Dow Jones Industrial Average off just 12 points to 18,268. NASDAQ dropped 9, and the S&P 500 managed to eke out a gain with a rise of 1 point.
More now on Walmart, which is making a bigger push into e-commerce. The world's largest retailer warned investors that this long-term plan will be costly and weigh on earnings over the next couple of years. That pressured shares, which fell more than 3%. Courtney Reagan has more on Walmart's shift.
Even though 90% of Walmart sales come from its stores, the world's largest retailer is opening fewer of them over the next couple years than initially planned and plowing more into its e-commerce business. Today, Walmart hosted analysts for its annual Investor Day at headquarters in Bentonville, Arkansas. And while the retailer outlined disappointing earnings guidance for the next 2 years, the big focus was on growing digital sales.
We have strength going on in the stores. We know we need to invest in e-commerce to get to scale. It's about the longer term for the company. And from a position of strength, we're deciding to do it now.
Buying Jet.com is a key pillar of Walmart's e-commerce strategy. Today, investors heard from Jet founder Mark Lowry for the first time, explaining his company's dynamic pricing model that claims to get consumers the lowest price.
That's what we do at Jet. We in real time, will show the consumer what the savings are of buying one product over another.
Lowry is just 17 days into his new job as head of Walmart e-commerce, and CEO Doug McMillon joked he's assumed the role of Lowry's bodyguard as they work to leverage Jet's e-commerce success into Walmart.com.
One of my responsibilities in this relationship is to try and protect Mark and Jet from the Walmart bureaucracy that exists so that they can continue to move with speed, continue to innovate, and run unencumbered. If Mark can be Mark within this company, great things are going to happen.
Walmart's online sales have fallen short of its aggressive 20 to 30% growth goal so far this year. But today, executives said Walmart could hit the target in the back half of this year and the next 2 years. Moody's analyst Charlie O'Shea isn't so sure the retailer can get there, but says even if Walmart achieves 20% growth online, its increased investment in e-commerce would be justified. For Nightly Business Report, I'm Courtney Reagan.
Federal Reserve Vice Chair Stanley Fischer said low interest rates may reflect deep-seated economic problems and not just temporary or cyclical factors. In a New York speech, Fischer said that the economy's fate and higher interest rates depends on coordinated government policies and not just Fed action. He suggested that some combination of improved public infrastructure spending, better education, and more effective regulation could promote faster growth in productivity and economic output. That, in turn, would pave the way for higher interest rates.
Some positive news on the labor market just one day ahead of the key monthly employment report. The number of Americans filing for unemployment benefits fell to a near four-decade low to 249,000. That decline is an indication that the labor market is tight and that employers are not that willing to fire workers. And as Hampton Pearson reports, both Wall Street and Main Street will be paying close attention to tomorrow's report.
When the Labor Department releases the September jobs report tomorrow, it's expected the economy added 170,000 jobs, with the unemployment rate holding steady at 4.9%. But private sector hiring slowed in September. Just 154,000 new hires, according to payroll processor ADP, the slowest monthly increase since April. At the same time, there were nearly 6 million job openings.
We have a record number of open job positions. It's going to be hard to fill them. We're coming into full employment, so job growth is going to slow, and this is part of that process.
Today, the Labor Department reported first-time unemployment claims fell to 249,000 last week, the lowest in more than 40 years. There's also upbeat news about American service companies. With healthcare and the restaurant industry leading the way, service companies grew at the fastest pace in nearly a year. The sector accounts for nearly two-thirds of the jobs in the economy. However, Wall Street analysts are split on how the Fed will read the jobs report when it comes to raising interest rates.
So you've got a committee that is solidly split between a few people who would rather just not raise until they see some obvious harm from being at zero or near zero, and other guys who want to raise rates today.
December seems on the table, but if something happens, then it's always going to be a little later, and there's always something.
Tomorrow is the first of two jobs reports before the next Fed meeting and the presidential election. We'll have to wait and see if there is an October surprise for monetary policymakers or the presidential candidates. For Nightly Business Report, I'm Hampton Pearson in Washington.
As we've been reporting, the labor market faces two major challenges: stagnant wages and a skills gap. But a new report today may shed some light on the issues. Steve Leisman explains.
A vast study of the U.S. labor market by the Pew Research Center released today finds the wages of younger workers have actually declined compared to 1980. The wages of older workers, they've soared. The study includes a survey of 5,000 Americans and an analysis of decades of government data. Using 2014 dollars, the study found that those aged 16 to 24 have seen their incomes decline 11%. Older workers, they've seen their wages increase by 37%. Over the time period, the median income of all workers rose just 6%. That was powered by two groups, those with four-year college degrees and women, who saw a 32% gain in income versus a 3% decline for men, closing the gender pay gap. Stagnant incomes is a big reason for widespread political dissatisfaction across the U.S. and other developed countries, one that has the attention of the World Bank.
The only group whose income did not rise between 1988 and 2008 were really the lower middle class and high income countries. From about the 75th to the 85th percentile, their incomes did not rise. And so their complaints, their anger, I think, is real. It's based on the fact that they did not enjoy the benefits of globalization like everyone else.
The Pew study found that those with rising incomes are those who have the highest education and the most skills.
They have more education, more experience, more training. And at the same time, they want people with different types of skills. They want people with social and analytical skills, fewer demand or lesser demand for people with physical skills.
That could explain the young versus old gap in wage gains. More and more younger Americans are in school, gaining the skills the labor market demands. Many older workers retire. Those who remain working could be better paid because they have the needed skills. For now, the survey shows the labor market wants more skills, and luckily, it also shows Americans know they need those skills to get good-paying jobs. For Nightly Business Report, I'm Steve Leisman.
Still ahead, do you hold some of the hottest sectors of the year in your portfolio? Well, they may be starting to cool off. The head of the International Monetary Fund has something to say about Deutsche Bank. Christine Lagarde says the sooner Germany's largest bank reaches a settlement with the U.S. Justice Department, the better. She said a deal would bring certainty as to what the bank will owe and whether it matches with its provisions. As we reported last week, Deutsche Bank's CEO said that he does not plan to raise capital and said he expects regulators to scale back their initial $14 billion request.
United Healthcare is accused of gouging customers. 3 customers have sued the company, saying it charged co-payments for prescription drugs that were significantly higher than the prices it negotiated with some pharmacies. Under its agreement, the pharmacy then gave the extra money back to United Healthcare. According to Reuters, United Health said that the, quote, pharmacy benefits are administered in line with the coverage described in the plan documents. The lawsuit seeks class action status.
Facebook's Oculus unit is trying to garner enthusiasm for its virtual reality goggles. After some stumbles, the company is hosting a conference for developers with the goal of one day becoming a dominant player in what could be the next major computing platform. Julia Borston offers us a peek at our virtual future from San Jose, California.
Facebook's Oculus virtual reality technology has been touted for its potential for gaming, but now it's going social. Facebook CEO Mark Zuckerberg announcing ways people from all around the world can interact in the same place. Up to 8 people can meet up in a virtual space with a new feature called Parties, and you can play games or watch movies in a shared space called Rooms. And now people can create avatars and even share facial expressions.
The magic of VR software is this feeling of presence, right? The feeling that you're really there with another person or in another place. And helping this community build this software and these experiences is the single thing that I am most excited about when it comes to virtual reality.
As Oculus faces growing competition from Google, PlayStation, and others, it just announced its high-end Rift headset will work with lower-cost computers. And it gave a sneak peek at a prototype for an entirely new line of headsets that would be as high quality as the Rift without requiring any computer.
Oculus CEO Brendan Iribe wouldn't say when the new line of headsets would be available or how much they'd cost, but he says the company's focused on serving a market of millions of people down the line.
There are a lot of VR enthusiasts out there, and this is still early days for VR, but we've seen a huge amount of adoption of VR. I mean, this is a dream so many people have had. That one day we'd finally step into that virtual reality world, and now it's a reality.
And to make sure there's plenty of content to experience, Oculus is doubling down, announcing it spent $250 million on content and planning to spend another $250 million to build the ecosystem. For Nightly Business Report, I'm Julia Borston in San Jose, California.
Theranos, the once fast-growing startup that ran into trouble, is shutting its clinical labs and blood testing facilities. It's also cutting 40% of its workforce. The company set out to revolutionize the blood testing industry and was valued at $9 billion just 2 years ago. But then experts found inaccuracies in the blood tests. Walgreens canceled its contract with Theranos, and the government began to scrutinize the company hard. Theranos says it will now focus on a product that will, in its words, commercialize miniaturized laboratories.
Twitter shares crater as interest to buy that company seemingly dwindles, and that's where we begin tonight's market focus. According to industry website Recode, Apple, Disney, and Google will likely not bid on Twitter's business. But as we told you last night, the Wall Street Journal says Salesforce may be a potential suitor. Shares of Twitter fell 20% on the news to 1987. Semiconductor equipment maker KLA-Tencor and Lam Research are scrapping their more than $10 billion merger amid antitrust challenges from the Justice Department. Separately, KLA-Tencor said it will raise its quarterly dividend by 4% to 54 cents a share. KLA was up nearly 1% to 71.79. Shares of Lam Research rose 4% to 119. Boeing saw orders for its airplanes fall in the latest quarter compared to a year ago. The decline was driven by lower demand for its 737 and 777 models. Shares of Boeing fell fractionally to $134.42.
Nomura downgraded American Express from neutral to the rare rating of reduce, which is effectively a sell, saying the credit card company's weaker than expected sales and higher than expected costs could lead to Amex cutting its guidance. Nomura also cut its price target to $56 from $62. Amex shares were off nearly 4% to $61.94. And Costco, the company that dented American Express by ending their card relationship recently, posted a 1% rise in same-store sales in September, topping analyst estimates. The discount retailer also said overall sales rose 3% in the latest quarter. Shares finished the day down 51 cents to $149.47. L Brands also posted better than expected same-store sales in September. The parent company of Victoria's Secret benefited from strength in its Bath and Body Works brand. L Brands up nearly 1% to $71.16. It was a different story at Gap. The apparel retailer said its September same-store sales fell 3% and that a fire in the company's New York distribution center pressured results. However, Gap's pants-on-fire decline was less than Wall Street expected. Shares initially rose after hours, adding to a 1% gain during the regular session. Shares finished at $22.78.
Investors may have been noticing a curious thing happening in the market. The sectors that started the year doing well are now doing poorly. Bob Pisani explains the shift underway in the market.
It's a new quarter and the markets are rotating. There's new leadership. Hot right now, tech, energy, and banks. Not hot, interest rate sensitive stocks like utilities, telecom, and REITs. What happened? Well, the facts on the ground have been changing. Rising interest rates are helping banks and hurting interest rate sensitive stocks, which had been seeing valuations move to unsustainable levels. Second, there's improving economic news. That's helping cyclical stocks. Third, an oil rally is pushing energy stocks higher. And finally, semiconductor stocks are powering the technology sector higher on heavy demand for chips in personal communication devices and for the home. You put it all together, we've got new market leaders. Banks, technology, and oil and gas companies are up double digits since the third quarter began, and utilities, REITs, and telecom stocks are down double digits. What's it mean? The biggest single mover of volatility is the Fed. Bulls are hoping that any volatility around a Fed rate hike in December may be offset by the strength we have seen in financials and technology. And for the moment, that scenario is holding. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Coming up, why the activity tracker is going to the dogs, literally.
Here's a look at what to watch for tomorrow. As we reported, the employment report for September is due out before the opening bell. A number of Federal Reserve presidents and governors are speaking, including Cleveland Fed President Loretta Mester and Governor Lael Brainerd speaking as well. And we'll find out if Americans are taking on more or less debt with the release of the Consumer Credit Report. And that is what to watch for Friday.
Verizon plans to begin working with drone makers to connect the flying devices to its network. Verizon says the plans would let drones connect to the internet while in the air and stream videos live. According to the company, there are also commercial applications like oil pipeline inspections and wildfire examination.
Snap, the parent company of Snapchat, is reportedly working on an initial public offering that could value it at $25 billion or more. As first reported by Dow Jones, the IPO could take place as early as late March. Snapchat allows you to send videos and pictures, both of which self-destruct after a few seconds of viewing them. Snap is also reportedly on pace to exceed the top end of its 2016 revenue forecast.
Activity trackers have a lot of people love them as a way to keep on top of their health and wellness, but now the wearable market is entering the animal kingdom. Smart technology companies are now targeting pets because, as Aditi Roy tells us, it's an increasingly lucrative market.
The wearables market has literally gone to the dogs. This is the Link AKC. It's a smart dog collar. The data is all on this module, and all you have to do is snap it in like this and then put it around your dog. A smartphone will track his activity. It's just the latest new product to hit the hot new pet wearables market. Aster is an Australian cattle dog who loves to go on walks. Her doting owner would love to know where she is and what she's doing when he's not there. And that's exactly the type of pet owner Link, a new pet wearable company, is going after.
It's not a demographic target, it's more of a psychographic target. And consumers and dog owners who think of their dog as a child, and they would be the early adopters.
The Link AKC is the first pet wearable funded and marketed by the American Kennel Club, a nonprofit for purebred dog owners. The smart collar monitors how much activity your dog is getting, has a remote-controlled light to help you find him in the dark, and shows you where he is at all times.
It's similar to a cell phone that you would give to your kids, so you have the peace of mind that you could always get in touch with them or know where they're up to. This is like having a cell phone for your dog.
The market opportunity is large and growing. In the U.S. alone, pet owners are expected to spend more than $60 billion on their furry companions this year, according to the American Pet Products Association. And the global pet wearable market is expected to reach $2.3 billion by 2022, according to Grandview Research. Link has some catching up to do. Its competitors include Whistle and Fitbark, which already sell pet wearables on Amazon. The Link AKC is available on pre-order now and soon on Amazon. It costs $199 with a monthly subscription between $6.95 and $9.95. The company hoping its collar will soon be a popular stocking stuffer for Fido. For Nightly Business Report, I'm Aditi Roy, San Francisco.
What did you just say to me?
I said you have to divide the number of steps by 4 to get the right amount.
To get the right amount of
yeah.
Who knows? All right, that does it for us on Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
And thanks from me as well. I'm Tyler Matheson. Have a great Thursday evening, everybody, and we'll see you tomorrow.